Good evening, everyone. Thank you for calling in on this midweek Wednesday beautiful evening. Good weather here in Penang. Today is 28th of May 2025, and our the local time now is 8:30 plus, I think 8:31 Malaysian time. So today the theme is about month of wind without anchor. Okay, so we shall go through this is the June forecast theme of wind without anchor. We shall look at it. Why is it wind without anchor? So for June 2025 forecast, there are many exciting things going on, especially now the fire is so strong. We are in a period 9 fire period. So definitely, I think non-stop every day, we have something to share in the Telegram channel, okay? And we also seize the opportunity. Our member has seized a lot of opportunity, in terms of profiting from the investment ever since they follow us since, I think, 2022, right? Yeah.
Yep.
And this month, this episode is the 36th episode. It's our 3rd year anniversary episode as well. Okay, so for those who just joined us, somehow or other you got to know us from a social media or from some of the marketing effort that I do through community. I don't sell ads. So if you are new, you call in. Let me just brief you what we are trying to do here. So this is a platform where both HJPC and I study a lot about stocks also. So we apply Chinese astrology for my part and PC on the trend research to forecast on economy, global, financial, geopolitical event to help you to make better investment decision. Because we know that the stocks performance also very much depends on the economy. Although now there are a lot of speculation, stock markets are like casinos, but eventually the fundamentals, they still follow the economy as well. Because company is not doing well, it's not making money, the economic factor is not good for the company to make money, that means the stock will not be doing good also. It's the same thing, right? It's correlated. But although there are some of the company that's not correlated, then you need to watch out. This is one tips I want to give to you. Okay, although the company is losing money and the stock still goes up, either it has a future growth or either there's something fishy going on. That's all only. Okay. So the top agenda for tonight is introduction. Then we will have disclaimer. Then a brief recap of last month's forecast. Okay, the May forecast. We always go back and check our forecast one. Okay, we don't just say only, we go back and check the news whether it's reflected on our forecast. If it is reflected, I will tell you it's reflected. If that's not, somehow or other, we miss forecast because this 80-20 rules, we will also say that. Okay, nobody can guarantee you 100%. I think even the best Chinese metaphysics teachers in the world, okay, the best means that those that are from Hong Kong, from China, they are the roots there. There are a few professors that I follow. They are, they are one of the best. They have one of the best knowledge in the world. Okay, influence of the 5 elements energy in June 2025. June 2025 geopolitical and financial forecast, and then we shall go through the summary. Okay, so the disclaimer here is that the content is purely based on our study in global trends related to 5 elements. If you all want to know that how the 5 elements can use to forecast the global trends, you can go back to my YouTube channel. I have a few videos on that talk about how the forecast of the 5 elements can predict the global trends, can focus on global trends, and also in Chinese astrology that you can use as a guideline, and PC, you will do the global trends research. So we would like to caution everyone to exercise cautions in investment in such volatile situation and do your own research on the company you want to invest. we will not give any stock advice. Okay. Additional support could be through email address in our members Telegram group. This is for members. Sometimes we share some of our research company. That's all. Okay. We don't recommend to buy, to sell, or to do anything. Okay. So we analyze different regional economies such as US, Europe, and China. Please note that there will be inherent biases or differences in regional perspectives because leaders are different, the climates are different, the resources are different. Therefore, the observations are just based on our studies and current economic trends from the people or from the mainstream news as well as from the Twitter of opinions of those analysts. This does not reflect absolute definitive judgments about any specific regions. Okay. We are neutral in our views. What we have presented is just based on what we have observed and reflected in the real situation. So we have actually a book on period 9. If those are interested to get it, you can get it. Maybe if BC you have a link, you can just drop it in the chat box. So this period 9 book actually we wrote it 2 years ago. I think most of the things is already starting to happen all around us. What we have forecasted is already starting to see. Okay, so in a way, if those that follow us in this book, I think they will also know where to look at, for the best investment, to hunt for the best investment. For example, we also talk about gold, right? Yeah. So let's recap on the month May 2025, what was predicted from the astrology side and how it reflected in the real life situation. I shall go through each of these that what we have predicted. Okay, so before we go into that, I just wanted to go into our books. We also write a book at the end of every year the book will normally publish around October, okay, on the upcoming year's energy and global trends, okay, based on the astrology forecast and the global trend studies. So in the forecast of this 2025 book, which was published on October 2024, we already predicted there will be supply chain disruption due to the energy of the chart. I also explained that in my annual talks, okay. The annual talk, we will not release it until, I think, June. It's exclusively for our members to have early access, okay. So we have talked about, all these things, and actually matter was very lacking in the chart. It's just that those who know Chinese metaphysics will know. So that's why rare earth elements, though it's called rare earth elements, is actually a heavy metal. Okay, so it's nearly indistinguishable. It's actually very small. It actually most of the modern technology they use very small quantity, but the technology is so complex, the circuitry is so complex that if you lack of one thing, means that you will have a problem. Okay, like last time, the Ukraine, the supplier of the argon gas, right? BC for the lithography process. So when this was let off, it also caused a lot of chain. It's just an ingredient to the equipment to make the machine. It's not the equipment of that. It's not part of the ingredients in the bomb list, but it's just an ingredient to get the machine running. Also, it has already caused a lot of supply chain problem in terms of the chips. If 2 years ago, if you recall, when the Ukraine war started. Okay, so right now is the rare earth. I think everyone begins to look at what rare earth is. And rare earth is actually everywhere has the rare earth. Even US also have rare earth, but what makes China so special is that they have, pioneer and also masters the skills of extraction at a reasonable, affordable cost. So they become the dominant suppliers. The rare earth is just not worth it until it's been extracted for its element in the terms of purity. And over 90% of the global supply comes from China, inner Mongolia, okay? And because of China, they have less stringent environmental rules over the past decade when they start industrialization. That's why they can, play a lot with this. But it's also a high price to pay for the Chinese, okay? Because some of these toxic things that is going around. And now it becomes a big hoo-ha because it's used in missiles, defense technology, EVs, turbines, and also smartphones because it's used in high performance magnets. Modern circuitries, they need all this is the hardware, the medical devices, and the clean energy tech. Okay, clean is not so clean. After all, if you go back to each component and see how they are being mined. So this is, already happening. Okay, next is that my forecast in May, destructured relationship. So we have suddenly dramatically cut diplomatic ties between UAE, Sudan, and this is in the headlines. And also Bitcoin is also another thing that reset. It's going to reset the major resets the another financial system. Okay, but I don't, please, when I say reset, you don't go and buy Bitcoin, please. Okay, please, no. Okay, our members knows when. Okay. Yeah, so in terms of precious metal, I say trend downwards. Indeed, it go trend downwards. You got to check. I say about wildfires, heat waves, volcanoes, it happens all over because this is a very hot month. And then started intense weather and tropical storms. There are also tornadoes and hurricanes that struck, okay, in US, in most part, and intensified secret negotiation. This guy, okay, he also, go to, US and Saudi officials has quietly do advanced talk, and then some US and Russian holding secret talks, on Ukraine in Switzerland. Okay, so and I have already predicted when the Ukraine war will end. Also related to the astrology. Okay, related to a group of stars that are going to move out of that region soon. Okay, it's already 2 years, so the movement will be out. There's a cluster of the star there. Okay, so recap. And also potential market rally. So there is indeed market rally in May. Okay, so the trend looks like it. Okay, and then overconfidence. I think we know that Donald Trump also has placed some very overconfidence in his tariff. That in the end, he has to pause all this tariff. Okay, and rising wealth inequality, especially I think in the West. The demonstration, the rally is quite intense now. And social unrest, nationalism in Europe, and also, and some military races like hypersonic sea race with China, some of these things. So let's go through the month June energy now. That's what everyone is looking forward to. Okay. Let me check the chat. Yeah. In month of June, the energy is actually very strong fire energy already. We are actually in the year of snake here. In the month of horse, huge energy. Okay. And actually, I think our pillar for the Mongzhong, and this is 24 solar terms is called, and in China it's called Mongzhong. I forgot what's the English term for it. Okay, so and then because in 24 solar terms, that means every month there are 2 solar terms. One is for weather and one is for the general trends. Okay, the trends, the cycles itself. Okay, so this one was set in, I think, in June 5th, and then followed by Xiazi, that means the summer solstice, okay, June 21st, with strong fire energy. So in this month itself, the metal will be quite severely countered because lack of storage, then the continuous transformation, which signify the continued transformation of the financial system. And then there will be, because metal is severely countered because the fire is too strong. So it will also cause some respiratory problem, because respiratory in Chinese medicine represents it's metal, okay, our respiratory system. That's why in Gengzi year, the COVID year, with the water and also the metal, then we have this COVID thing. So it will return of illness, or maybe flu or COVID, and all these things starts to heighten up. I think the COVID case also starts to go
Yeah,
up.
Evelyn.
Yeah.
Yeah, just want to add, recently there has been report that there's some outbursts of flu cases here in Thailand, Hong Kong, and also some parts of China.
Yeah, that's right. That's why we tell you that be careful when you travel, because this year also people has tendency to travel because there's a lot of sky horse animal. So and then there's also a plotting of social unrest going on, and demonstration of the commodity prices going to go up even further. Okay, the energy price will go up. Once the energy price goes up, the commodity price, everything will goes up. The essential goods will go up. So, after summer solstice on June 21st, there will be more obvious control of government trying to control the social unrest, the people's sentiment. Okay, in after June 21st, then there will be expected intense heat waves in many regions. Okay, wildfires, especially in US, in the dry zones. So expect volatility in tech stocks, semiconductors, automotive, and also financial sectors. I wouldn't say it's up or down. Okay, I cannot really tell you that. But there's one thing that we can look at, is that the energy sector will tend to pick up momentum. Okay, it will be an attention sector for the month of June. Okay, so this is the prediction for June, and let's look at what the hexagram has for us.
If you find this video informative, please give it a thumbs up and consider subscribing to my channel for more valuable insights and updates. By subscribing, you will be the first to know when I post new content.
So the month, why I call this June month, the theme is wind without anchor. Because you look at the hexagram itself. Okay. You look at the hexagram itself, it's actually wind over wind is a pure quad. Those who know hexagram one, this is a pure quad. Okay, hexagram number 57. So when we have wind over wind, means that no direction, too much uncertainty. Okay, want to predict also very difficult, but we just look at the five energy chart to predict. So this is called Xin in Chinese. Okay. I didn't put in the Chinese term. So Xin means that there are behind the scene influences. In good times, it means that gradual progress, the gentle wind that blows. But it also has its as usual, we have both good and bad. But this year, because this month the energy is strong, definitely it will also tend to manifest its more negative side. So we will have suggest that that behind scenes that government is trying to implement control surveillance, especially after post-summer solstice. Then the wind, Shin, hexagram number 57. If those that, it's quite interesting, and those that know Chinese and also know a bit of Chinese metaphysics, a snake, right? Snake is Si, right? These are actually Si here. Okay. So it's actually in the wind, the Si itself, and also in the wind hexagram, we would represent also wind. That's why we have a lot of winds problem that going on in the years that that when the southeast animal is together with wood. Okay, you will not have this again in the next 60 years. Okay, those who understand Chinese metaphysics will know what I'm talking about. Okay, so if you're not, I just interpret for you in a very layman terms. So hexagram number 57, it implies that volatile winds, storms, unpredictable climate patterns. Okay, tornadoes and sudden gaze. So and activists descent will not descent will not vanish. So there will be still, small movement that build up momentums, leading to either reform and revolution in the second half of 2025, because we still have a lot of nations these 2 years are having elections. So the far right now people are favoring some of the far right political party, right? BC, especially in Europe. Yeah, okay. So this will, these are all the wind of change that is without anchor. So there's too much uncertainty in the geopolitical, in the global trend scenes. Okay, so this is how we look at the chart here. And okay, so let's go over to BC. On your, on your part, on your global trends, do you see the same trend as what I'm seeing from the astrology energy, astrology study, or the 5 element study that is giving me the indication? Over to you, BC, you want to share your screen?
Yeah.
Okay, let me stop sharing.
Okay. So as Evelyn say, just to recap what we predicted in May. So we warned that consumer goods shortage could lead to hoarding and smuggling, but thankfully this was avoided when Trump cut the tariff on Chinese goods to 30% and called for a 90 days truce. So this did not happen. I believe that Trump saw the early warnings of a impending doom, when he met with Target as well as Walmart executives. In one of the meetings, they warned him that the supermarkets could be empty of any goods. So Trump actually decided to cut the tariffs. But nevertheless, it still make the goods 30% more expensive, which is why the inflation will still continue to be above 2% and trending higher in the course of the next few months. So at the point of writing the income tax bill, or Trump said the big beautiful bill has yet to be signed into law by the president. Although it has been passed by the House, the Senate is right now maybe against the bill because it sort of increased the budget deficit by almost, if I'm not wrong, more than $2 trillion. So that is why the Senate, they might disagree without any further cuts. So in Europe, we expected inflation in Europe to be negated by strengthening currencies, but this is not the case. Europe inflation remained unchanged, while inflation in UK rose 3.5%. One of the reasons was because of the tariff that is impacting the expectation of higher inflation and such. So originally we thought that because European currencies were strengthening against the US dollar, they actually will actually impact inflation, but that did not happen. In fact, inflation actually went higher where the UK is concerned. So both EU and China are still at odds. We did mention that Europe and China will be working based on the news that they will be working towards countering US tariffs. But apparently Spain calling for compromise, but Brussels, where the EU Parliament resides, they are unwilling to compromise. In fact, it sounds kind of silly to retaliate against US tariffs. The EU actually wanted more more issues to tackle with. They come up with a lot more actions to target China. So, it's kind of silly. You target China to counter US. But then, nevertheless, EU right now and US, they are on the verge of talking again. So perhaps something would come out differently. So we were half right when it comes to the PMI. UK services saw a gain, while EU services PMI saw a decline. Earlier, we thought that because the ECB has cut interest rates, there will be a pickup in the services. Because manufacturing, we were right, it remains very weak. But even though the ECB has cut interest rates, the PMI still saw a decline. So this is something that is translating to European economy being in pretty bad shape. So where we got right, US as expected, inflation remained above 2% at 2.3%. We predicted that US could be on the brink of supply chain crisis, which could lead to an increase in business bankruptcies. And here we were right. Many similar warnings hit the mainstream media. And meanwhile, bankruptcies rose 9% year on year in April 2025. Although Trump subsequently scaled back the tariff on Chinese goods at 30%, the pressure on many small and medium-sized businesses still persists. So you can see that a number of news in the month of May hit the mainstream media, and the former Atlanta Fed president warned of inventory cliff, US small business at risk of bankruptcy due to tariff policy, SMBs means small, medium businesses, sound the alarm. 85% of small business owners could be impacted. And here Bloomberg says that Trump's tariff could still pressure small businesses, even though there is a pause, because 30% is still high, because for a lot of small businesses, their profit margin after deducting all costs could be around 10 or less than 10%. So we mentioned that any rally in the US market would be short-lived, and this is due to the threat of stagflation. So after the S&P and NASDAQ rallied over a 3-week period, it started to come down. But of course, that was because there was a lot of news that came out, such as the bond yields rising for a lot of major economies, which means that the bonds are quickly losing their value, and especially in Japan. So there were a number of negative news, such as the tariff against Europe at 50%, which hit the headline. But going further in this week, we may see some slight upside, because Trump has said that he will delay the tariff until 9th of July. But nevertheless, after the 3-week rally, there was a rollover in the index. So in Europe, we mentioned the Europe currencies will perform better than the USD. So as of 25 May, the euro strengthened 0.53% versus the USD, while the Great British Pound strengthened 1.96% versus the US dollar. And this is despite the ECB cutting interest rates in April and the BOE cutting interest rate in May as widely expected. So we were right about the PMI manufacturing being in contraction. So we did say that there was the rise in the Euro stocks index was because of the poor performance of the S&P in the month of April. And subsequently, if in the month of May there is a rally, then the funds would actually shift back to the US. So this is what happened. Month to date, the Euro stock index is only up 0.78%, while the S&P is up 3.55%. So sometimes you need to understand that a lot of the big money, when they move the market, they are moving just from one market to the other. And when another market recovers, they will just move the funds back. So this is very similar, like a lot of funds went into emerging markets during the months when the US market underperformed. But when the US market started to rise, a lot of funds also exited from the emerging markets and back to the US market. So this is how money moves around the world. So in China, we mentioned that retail sales will remain resilient, supported by government's trade-in policy. So from January to April, the consumption of digital communication products grew 25.4% year-on-year, while EV sales grew 35% year-on-year. China's economic indicators remain buoyant, except for the real estate market, which remained challenging, even though some cities saw some stability in home prices. We forecast that China trade surplus will continue to grow. The tariffs in April hardly hurt China. From January to April, China trade surplus totaled 368 billion, significantly higher than 273 billion surplus achieved from January to March. So you can see here that there is just the month of April, there is a gain of 95.8 billion. Okay, so versus the period from January to March. From January to April, the gain was 95.8 billion or 35.9% higher. So even though there's tariff, but China is still managing the tariffs quite well. China and US agreed to roll back the tariffs with a 90-day truce. Now, this is far from a trade deal, and Chinese political circles have pointed out that challenges in negotiation persist. And one of the things is that after the 90 days truce was announced, when China, Huawei came out with their Ascend chips that they are fast rolling across China to build up the data centers. You see that US threatened secondary legal action against any countries that buy Huawei chips. But China actually warned the US, and then US just roll back and say that they warn people against using Huawei chips rather than taking legal action against countries that buy Huawei chips. So that means that there's still a lot of disagreement. And the 90 days truce is to allow Trump more leeways, okay, to negotiate with other countries so that the immediate impact from restriction of goods to the US is being temporarily halted so that US can still consume Chinese-made goods. But I believe that eventually they will still not come to an agreement because there's just too many things that the US want to prevent China from achieving its advancement in technology, as well as US wanted to pressure other countries to have less reliance on China, but that is very difficult because China is the world's manufacturer and the world's largest trading partner for many countries. Chinese government has come up with a policy to standardize EV procurement on behalf of the government, including unified planning, standards, purchase funding, and procurement and allocation management. Now, this is another step towards eliminating those not meeting the standards in bid to force mergers. And the government has previously come up with other policies. So we actually mentioned that the government would start looking into ways to force mergers in China because there are just too many people producing the same product that they are, after many years, they are not profitable. So they continue to consume resources for unprofitable returns. So that's why this is how China will actually come up with policies to restrict the market further so that only the strongest and those who have demonstrated they can excel will continue to survive. They have done it previously with the cement industry. They have also done it similarly with the rare earth industry. So this is part and parcel how the Chinese government would actually force companies to merge. So we also say that China continues to advance its technology. So here we have news that Xiaomi came out with its X-Ring 01, which is a 3-nanometer chip. And another company came out with an AI breakthrough, and Chinese scientists behind supercomputer in orbit urges collaborative use of AI in space. So China is going to build a supercomputer that orbits the space, orbits around the Earth. And not only that, China is also building a huge solar farm that orbits around the Earth, and that power would actually be transmitted via radio frequencies back to the Earth. And then China deploys world's largest fleet of driverless mining trucks powered by Huawei tech. So let's have a look at US economic indicators. Now, the US is always a picture of mixed indicators. Sometimes it looks good, sometimes it looks bad. And of course, I believe that there's a lot of manipulation of data, as with most governments. Okay, sometimes US accuse China of manipulating data, but I think most governments would manipulate data to tone down the kind of severity. Otherwise, there'll be a lot of unhappy people. Okay, so always take economic indicators with a pinch of salt, and it needs to be backed up by other things. So here, US GDP contracted 0.3% year-on-year in Q1, whereas China actually have a 5.1% GDP growth, if I'm not wrong. CPI rose 0.2% month-on-month in April, and year-on-year it grew 2.3%, down from 2.4% in March. Now, surprisingly, April was when the tariff hit, but then overall inflation was well managed, in particular because energy prices came down quite a lot. At one time, oil was actually below $60 per barrel. Cost CPI rose 0.2% month-on-month in April. Year-on-year, it rose 2.8%, unchanged from March. PPI fell 0.5% month-on-month in April. Year-on-year, it gained 2.4%, down from 2.7% in March. Retail sales rose 0.1% month-on-month in April. Year-on-year, it gained 5.2%, up from 4.6% in March. Net retail sales less CPI was 3%. So there were a lot of retail sales in the period of March and April, mainly driven by consumers who are very worried about shortage of goods. So many rush in to buy, and that causes the retail sales to move up. Industrial production was unchanged month-on-month in April. Year-on-year, it rose 1.5%, up from 1.3%.
In a world where market trends are as mysterious as the stars, investors seek clarity beyond the chaos. Meet Evelyn Tan, a Chinese astrologist, and her co-founder, Wong, an investment guru, where ancient wisdom meets modern market trend research. Experience investment forecasting refined by Chinese astrology. Join top investors who trust their precise insights for their most crucial decisions. Ready to transform your investments? Join now for exclusive insights and forecasts brought to you by Astrology and Global Trends.
3% in March. The National Association of Home Builders Index came in at 34 in May, down from 40 in April. So the indicator is showing a lot poor confidence among the home builders in the US. Housing starts rose 1.6% month-on-month in April, while housing permits plunged 4.7%. New home sales rose 10.9% in April. Year on year, it rose 3.3%. Now, obviously, if you look at it, home builders' sentiment was very poor, but new home sales continue to rise, mainly because I believe the home builders were offering huge discounts or a lot of promotional gimmicks to push the inventories. Otherwise, if they are saddled by inventory, that will affect their cash flow. So existing home sales fell 0.5% month on month in April. Year on year, it fell 3.1%. Preliminary PMI for manufacturing came in at 52.3, while preliminary PMI for services came in at 52.3, both of which signal expansion. Here, it goes to show that, the PMI is actually the purchasing managers index, which goes to show about, their level of confidence in the economy. So right now, it signals expansion. But then if we look at the US economic indicators, the Conference Board Leading Economic Index, or LEI for US, fell sharply 1.0% in April, after declining 0.8% in March. So right now, the leading economic indicators is going down again after rising from here. So does it signal that the US economy might continue to deteriorate? We will only know more if in Q2, the GDP comes out negative again, then that would mean that the US will be in a technical recession. So the LEI declined 2% in the 6-month period ending April 2025, the same rate of decline as over the previous 6 months. Now, here is the latest on Trump tariffs. Tariffs on China has been reduced 30% and will remain thus for 90 days. And as I mentioned, what happens after the 90 days is anyone's conclusion. Okay, it can be that it will be extended again. I won't be surprised because the US would be willing to prolong it, because if they prolong it for another 90 days, that means goods will continue to come in for Christmas and for the Black Friday. Otherwise, towards the year end, there will be insufficient goods. So I won't be surprised it will be extended for another 90 days. Okay, so Trump has also announced 50% tariff on EU to force the relocation of its manufacturing to the US. However, tariffs were delayed from 1st of June to 9 July. So here, Trump wanted to set the, during the interview on Friday, he said that there's no more deal. I have set the deal. But then when the stock market fell, I think about 80 or 90 points, then on Monday, he said he will delay it to 9 July. So the thing is that Trump is always monitoring the market, and his policy will shift according to how the market dictates. So that means that he often benchmarks his policy against the market, which will actually be very inconsistent as long as there's different shifts in market sentiment. At the same time, Trump also announced that both Apple and Samsung will be tariffed 25% if they do not relocate their smartphone manufacturing to the US. Now, this is again, trying to bait those companies to come in, but the US have no other, manufacturing the iPhone in the US is not something that is easily done, because a lot of the components and parts are actually from overseas. They are assembled in China because of the ability of the labor force to be able to meet tight deadlines, work expeditiously.
Actually, these questions were posted by Obama to Steve Jobs long time ago already.
Yeah. So the thing is that there need to be secondary industries, which are actually components and parts that come in to support the iPhone manufacturing. Anyway, the thing is that China only make, I think someone reported that about $38 from the, $2,000 iPhone. And China's share of that GDP is very, very low, okay? Of the total product is very low. So the chips and all those actually comes from elsewhere. They don't use Chinese chips, okay? But then what they have are the casings and such, which to China that are actually very cheap products. Okay, the more expensive one are the chips, the other
The electronic
electrical,
circuits,
yeah,
the PCB,
yes,
yeah, inside. It's not the casing or the mechanical parts because those can be produced quite cheaply.
yes. So the thing is that the US have none of this. Okay, that's the problem.
Mm.
And the US cannot produce all these components and chips in the US itself. No matter what, it will still be imported to the US and assembled. But assembling in the US would be much more expensive. That's it. So overall, there's still no trade deal between there's no trade deal with China or any other country except the UK, which is essentially a nothing burger. It's still the 10% that was originally implemented. So Trump likes to play with all these huge numbers. Eventually, scale back down. He will say that we are still winning because we are still charging. So probably for 50% tariff on Europe, eventually, after a lot of discussion, Trump say, okay, it will be 20%. He will still say that the US won because we still tax them 20%. That's how I see it. He will, or if let's say it's 10%, he will still say that, okay, we still get 10%. So that's the thing. So this is what Chinese officials are stating with regard to the US and China trade war. Chinese state media cites commentary, US-China trade tensions are far from over, warns of prolonged complex negotiations. So that's the Chinese point of view, okay? To the Chinese government, we are prepared to totally disengage because as has been shown, okay, their trade surplus continue to go up. So meanwhile, US businesses remain under pressure due to the significant increase in costs, as the newspaper headlines have warned. And what we want to focus on in the coming month is actually the US bond crisis. Now, these are actually from last week, okay? You can see that the US yield, okay, has been very, very high, especially if they are paying huge interest on debt that is more than $1 trillion. I think right now it's about 1.3 trillion, if I'm not wrong, for a year. And US treasuries are under siege as yields spike across the board on a month-on-month basis. Here you can see this, the month-on-month basis, how much that it has actually changed, okay? And the real problem is in the US long-term, US treasuries, namely the 10-year, 20-year, and 30-year US treasuries, which saw a year-on-year spike. So here you see year-on-year, it has increased significantly, okay? 20-year, 30-year, 10-year. So that goes to show that if the US wants to borrow money to repay on the longer term, the yields are going much higher. But why? Now, the spike in yields will burden the cost of refinancing US debt, which is around 8 trillion to 9 trillion, of which are due this year. And to quote an article from Medium published on 23rd March 2025 by Akim Fitzgerald, okay, he says that 30% of US federal debt, more than 9 trillion, must be refinanced within a year. That means that within this year, it needs 8 trillion. But the US can never repay the principal, okay? It can never repay the bond value without refinancing. So that means that whatever that they need to refinance will add on to the current debt load, okay? It is not that it is going to be gradually reduced. That's why the US debt has never been able to be reduced, but continue to be added on. Because when you refinance, okay, like 8 trillion is due, but then you refinance 8 trillion, that 8 trillion is still there. But what changes is that this 8 trillion right now carries a much higher interest, which the US doesn't have the money, and then it need to refinance to pay the interest because all other things have already been used up for defense, for social security, for Medicaid, for government spending. So no matter what, it will continue to be added on. So previously, when US Treasury yields go up, the dollar index will also go up in tandem, but this is not the case now. So this goes to show that even though US yields have been trending up, the dollar index have been trending down. So why are they behaving thus? This is because the US is facing a crisis of confidence in its ability to sustain its debt. People no longer believe that the US dollar is a safe haven currency, and the US Treasury is no longer a AAA rated risk-free bond. It has been when Moody actually downgraded the US debt, US debt no longer have any AAA rating anymore, and that add on to the belief that for many investors that the US doesn't have the ability to sustain its debt. So here is the spike in the 5-year US Treasury credit default swap, and you can see that it has gone up quite high, okay? And this was the CDS that spiked during the Fed's QE 1 to 3 when the ability of the US to pay for its debt becomes questionable. So what could be done? Now, one way is to crash the market, resulting in a flight to US Treasuries, thus reducing the yields significantly. That means the reinstatement of higher tariffs. The recent 50% tariff on EU could be the first of such moves. So like I say, even if it's been reduced, it will still make it painful for the consumers. And tariffs will crimp consumption, pulling down the economy further, which allow the Fed to cut interest rates or launch another round of QE. This push up the demand for US Treasuries, pushing the yields even lower, preferably back to zero bound range. Now, this is one cure. And the other way is to reset the financial system. Revalue gold higher to enable the US to pare down its debt or use the increased value in gold to buy Bitcoin to push up the price of Bitcoin even higher. And based on the current government debt and gold reserves held, it will require gold to be priced at $141,000 per ounce to wipe off the entire debt. Or if the government intend to purchase 1 million of Bitcoins as proposed, it will require Bitcoin to be priced at 36.9 million per Bitcoin to be able to wipe off the entire debt. Now, this is a scenario where the US say we want to have a clean slate. But both scenarios are unlikely because they will not go to that extent. And we could see varying scenarios combining the two. So one of the things is to how the US would actually create a financial reset using gold. Now, gold revaluation, US Treasury Secretary Bessent has denied that there's going to be a gold revaluation. But when it comes to politicians, we always look at what they do and not what they say. So what happened during the first quarter of 2025? US gold imports actually spiked. Now, why does the US import so much gold if, let's say, there were no agenda? Because if you look back for so many years, it has never spiked. Now, this one spiked because the COMEX were caught extremely short during the pandemic. So they have to import back all the gold to actually deliver the physical to the people who demanded physical deliveries. So right now in the first quarter, it actually shot up even much higher. So this goes to show that something is amiss, and it has probably got to do with how gold would fulfill a certain role. What it is, we don't know, but many analysts suggested that there is a potential to use gold to revalue gold higher so that the US can sell the gold, okay, to buy Bitcoin. So this is another example how a financial reset could be done, but using cryptocurrency. Now, Trump admin has been touting building a strategic Bitcoin reserve. Trump wants the US to take the lead in the development of cryptocurrencies. Here's directly from US Treasury Secretary Bessent. Now, this is what he says. Speaking of stablecoins, Bessent said that stablecoins could create roughly $2 trillion worth of demand for US treasuries and treasury bills over the short term. As of now, for comparison, the number is 300 billion. So that is already telling you something. Meanwhile, Trump's World Liberty Finance just launched its own $1 US stable coin. Now, it will be backed by short-term US treasuries, US deposits, and other cash equivalents. And there are some banks which are actually in discussion to launch their own stable coins. I read that it actually, if I remember correctly, Citibank, JP Morgan, and another bank are actually in discussion. So one way is that they issue stable coins. Okay, now assuming the US Treasury issues stable coins and they buy US Treasury to force the yield down. So what does it mean? Now, if the stable coins are actually issued by the US Treasury or by the Fed, as long as any governmental department are concerned, then it will be seen as a QE. Because out of nothing, they create the stable coins to buy US Treasury. Just like right now, the US Treasury Department is in small quantity issuing treasuries to buy back treasuries. And if let's say they go on a huge stable coin issuance of stable coin to buy US treasuries, then this is just another form of QE. And if let's say that happens, then we can expect that the US dollar could be weakened because everyone who sees this will immediately know that it is a form of QE. So what could happen in June? The major issue on the horizon is refinancing US debt because the 8 trillion, a huge portion will be due middle of this year. So the US need confidence to return to the US treasuries. We could see multiple efforts being made to push the yields down, which could include one or more of the following. Issuing stable coins to invest in US treasuries. The Trump admin could also make this mandatory for stable coins operating within the US jurisdiction. So the US might, Binance, if I'm not wrong, is banned in the US. So because Binance has huge capital, they have a lot of money. So they can actually ask Binance to come in and then say that, well, we allow you to operate, but you must use your stablecoin to buy US Treasury. Okay, this could be one of the options. Revaluing gold higher to offset a substantial portion of the debt. They are not going to wipe off the entire debt. Okay, if they are going to wipe off the entire debt, there's no reason for them to come up with stable coins to buy US Treasuries. So what could be happening is that if the revalue go higher to offset a certain portion of the debt, then the burden of refinancing could be reduced, and therefore the yields could potentially go down on their own, forcing a market correction to force diversification in US Treasuries. Now, this might involve reinstatement of higher tariffs to cause a market correction. I think if Trump is very sensitive to the markets, this will only be done if there's no more solution, okay? To allow economy to deteriorate to force the Fed's hand to cut interest rate or implement QE. So it could also lead to a controlled demolition, which means that one of the key things is that the US will play the role of facilitating the market to go higher to enable his fundraisers, okay, those people who back him to exit the stock market. Because the current trend shows that hedge funds are on net short, whereas retail investors are the ones that are buying the dip. So this is something that in the true sense would allow the rich funds, okay, to exit the market, so that because retail are buying, so that then they become net short. It's something like what happened during the 2008 global financial crisis, where the big banks are selling the CDOs, okay, the CDOs, and then they themselves are actually short the CDOs. Okay, this is what happened that caused the global financial crisis. So similarly, this could be something. Yeah.
I want to interrupt a bit. This one of our audience says that kindly repeat the point on hedge funds because I think there's some audio cut out.
Yeah. So I'm saying that for the members area recently, I posted it in the weekly report that retail investors are net buyers, but hedge funds are net short the market. So this is something like what happened during the global financial crisis. You know those credit derivatives, which very famously Goldman Sachs was selling the credit derivatives. And while selling them to the investors, they are also net short the derivatives. So that means that on one hand, they make money from selling others, and then they make money when the market crash. So this is something that could happen. And the recent rise in the stock market was to enable the Trump's donors, okay, or those people who finance him to get out of the market, so that when they are fully out, the market gradually comes down, okay, so that they make money now when they exit, and meanwhile they are piling on the short side of the market, so that when it finally comes down, they make money again. So this could be one of the tactics, okay, to allow the economy to deteriorate and then force the Fed to cut interest rate or implement QE. So the posturing currently seems to suggest the role of stablecoins playing a more important role. And because these are actually using, if let's say the Treasury or the Fed is involved in issuing stablecoins, then this would suggest QE, and therefore the US dollar would weaken and inflation will remain high and consumption will be impacted as consumers are tapped out of their credit. And this is already happening because of the tariffs as well. So the consumers, actually right now in Malaysia is very popular, some finance companies that continue with the buy now, pay later. But this buy now, pay later in the US right now have racked up record number of delinquencies, which means the people cannot pay back after they buy something. Okay. And in Malaysia, there are some distress now being seen as well, because this is like you take the goods first, but you want to pay back later. But then subsequently, because of inflation or because of certain commitment,
Or job
then
loss.
yeah, they can't pay back what they
Yeah.
bought. Okay. So evidence of stagflation is becoming more pronounced, especially if you look at it, if there's inflation and small businesses are being affected, small and medium-sized businesses are the major employers in the US. If let's say they face bankruptcies, then a huge bulk of the employment will be impacted. And Powell has already said, tariffs will cause huge unemployment, high inflation, where the Fed cannot take action because inflation remains high, and therefore overall the economy will slow down. So that is by definition a stagflation. Now the pressure on US Treasuries could see banks' unrealized losses increase dramatically, because a lot of the banks hold US Treasuries as an asset. So when the yields go up, it means the value of the assets go down, especially where bonds are concerned. So that means a lot of the banks are sitting at a very huge unrealized losses. And these are actually not counted in the income statement. Okay, it's treated separately. And I think the latest one shows that the banks are sitting at an amount of 480 billion in unrealized losses. As a result, market sentiment could take a hit, okay, pushing the dollar index lower. Now, this will be bullish on commodities stocks, including the precious metals. So this is a scenario whereby just now Evelyn mentioned that June we can see the market being volatile with commodities going up while the other sector of the market goes down. So in this kind of scenario, it will happen when the evidence of stagflation becomes more pronounced and yields of US Treasuries refuse to go down. So uranium producers and energy utility companies could see a return to bullishness as Trump signed a new executive order to speed up the development of nuclear power in the US. Now, another major black swan is the Japanese government bonds or JGB bonds, which have seen yields rising spectacularly with inflation skyrocketing in Japan, especially rice, which is the main staple of the population. If you draw a chart of rice price right now in Japan, you will see that, it has shot up spectacularly. So the BOJ may be forced to dump even more US Treasuries to boost the yen. So they have to sell US Treasuries, sell the dollars, and then buy yen. Because that's one way they have to do it. They cannot, at the current state of the Japanese economy, they cannot raise interest rate, because if they raise interest rate, then the Japanese government would be insolvent because their debt to GDP is around 250. I'm talking about government debt itself is more than 250% of the GDP. So if they raise interest rate, the government will become insolvent. So the other thing is that sell US Treasuries to boost the yen to help reduce the inflationary pressure. But if they sell the US Treasuries, then that means that the yields would go up. And if the yields go up, then the risk of the market turmoil will also increase. Now, if the BOJ hike interest rates, we could see a reverse yen carry trade, which could result in a major sell-off in global stocks, especially US stocks. So these are the Japan, what's happening in Japan right now. If it becomes worse, it can definitely impact the overall global market in June. So going to Europe, Euro area GDP grew 1.2% year-on-year in Q1. Germany GDP stagnant at 0% in Q1 2025, which means is 0% growth. But this is definitely better than previous few quarters where it was negative GDP growth. So France GDP grew 0.8% in Q1. UK grew 1.3% in Q1. Euro area CPI came in at 2.2%, unchanged from March. UK CPI came in at 3.5% year-on-year in April, up, not down, yeah. Up from 2.6% in March. So Euro retail sales rose 1.5% year-on-year in March, from 1.9% in February, which was revised down. UK retail sales came in at 1.2% year-on-year in April, up from 0.1% in March, which was revised down. Now, German manufacturing PMI came in at 48.8 in May versus 48 in April, while services PMI came in at 47 versus 49 a month ago. France manufacturing PMI came out at 49.5 in May versus 48.7 in April, while services PMI came in at 47.4 versus 47.3 a month ago. UK manufacturing came in at 45.1 in May versus 45.4 in April, while services PMI came in at 50.2 versus 49 a month ago. So you can see that Germany and France economy is really not performing very well. Now, what could happen in June? The euro and Great British pound will continue to strengthen against the US dollar, because as long as the treasury yields remain very high, is the lack of confidence in the US dollar which will push the US dollar down. Inflation will remain stubbornly above 2%. The weak US dollar will lead to higher cost of energy, which directly impacts euro, which still heavily relies on energy imports. The EU and China will be unlikely to reach a trade deal due to conflicting interests between politicians and business communities, especially in Spain. The Spanish government is very eager to work with China, but Brussels disagree. And in Germany, the German car manufacturers and industrialists are very eager to work with China, but the German government is not very forthcoming. Okay, so the delay of the 50% tariff on EU goods will provide a window of opportunity to reach a trade deal, but the EU will be wary of the hollowing out of its manufacturing base. Expect to see some resistance. So Trump insists that the EU should relocate some of their manufacturing into US, but that means that will hollow out the manufacturing in Europe. So there will be resistance. So probably both sides want to settle at something, so eventually the tariff could be reduced, but Trump will boast that it's still a win because tariff is still, US will still earn from the tariff. So PMI for manufacturing will remain in contraction due to economic uncertainties, which prevents high capital investment into manufacturing. Euro economy has slowed, especially Germany, which has seen multiple quarters of declines. Now, China economic gain indicator CPI fell 0.1% year-on-year in April, unchanged from March. So again, a lot of people like to say that China is facing a deflation, but you can see that if let's say it's deflation, then we could actually see the CPI falling, let's say 10%, or or maybe more than 10%, but it's always hovering around 0.2 negative to 0.1 positive. Now, one of the key reasons is because China is reindustrializing its manufacturing with high-tech manufacturing. So that means that it consumes less energy because there's a lot of dark factories right now in China, and the efficiency of using robotics and such have actually reduced the cost per unit item. So because of that, the CPI, is within a very tight range. So core CPI rose 0.5% year-on-year in April, unchanged from March. PPI came in at negative 2.7% year-on-year in April, down from 2.5% in March. Retail sales climbed 5.1% year-on-year in April, down from 5.9% in March. Industrial output rose 6.1% year-on-year in April, down from 7.7% in 2024. Should put it as March. Oh, sorry. Not much. 2024. Hold on. Yeah, correct. So this is due to the impact of tariff, which caused Chinese manufacturers to slow down their manufacturing while looking at new markets to offload their inventories. So fixed asset investment rose 4% year-on-year in April, down from 4.2% in March. Survey urban unemployment rate stood at 5.1% in Q1, down 5.1% in April, down from 5.2% in March. So overall, you can see that economy in China in April versus March, there's some slowing down, okay? Especially in terms of retail sales, in terms of industrial output, and fixed asset investment. But overall, it's still growth. One of the things is that when uncertainty hits, what happened in China would be the people would be very much more careful with their money. They are spending less, and therefore it affects the retail sales. Manufacturers which already manufacture, but the market was suddenly closed in April, so they were eagerly looking to offload, and there's no need to continue manufacturing if, let's say, uncertainties persist. So again, because of the uncertainties, it affects the sentiment, and therefore fixed asset investment also saw a slight decline. But overall, there's still growth. Now, other economic indicators, China total goods imports and export in renminbi denominated terms expanded 5.6% year-on-year in April. China goods exports rose 9.3% year-on-year to 2.27 trillion, while imports went up 0.8% year-on-year to 1.57 trillion. Now, this resulted in a surplus of 700 billion. The first 4 months of this year, China total goods imports and exports in renminbi denominated terms expanded 2.4% to 14.14 trillion. During the period, China's export rose 7.5% to 8.39 trillion, while imports fell 4.2% to 5.75 trillion. This resulted in a trade surplus of 2.64 trillion. Now, the fall in imports is inevitable as China moves ahead to achieve self-sustainability. What is remarkable in April trade figure is that China export to the US actually fell 21% year-on-year. The growth in exports to ASEAN and Europe helped to turn the tide. Because previously, China actually import a lot in terms of goods like chips. But right now, China is banned from importing US chips. So what China does is that they become more self-sufficient. When they become more self-sufficient, that means they will be importing less, and therefore the surplus would continue to grow. And as China becomes more self-reliant, surplus from international trade in goods and services is destined to increase. And especially there's a lot of growth in the services industry. In fact, services industry imports is gradually trending down. Now, services are such things like IT services, where China right now, is becoming more self-sufficient. And China real estate, commercial home prices in major Chinese cities continued to stabilize in April. A survey by the National Bureau of Statistics show home prices in 17 major cities stay flat or dip in April compared to the previous month. The prices continue to fall on a yearly basis, but the pace of decline further eased. The new home prices in first-tier cities, Beijing, Shanghai, Guangzhou, and Shenzhen fell 2.1% year-on-year in April versus negative 2.8% in March. Second home prices edged down 0.2% from March. Home prices in major cities monitored by the MBS also posted narrow price declines compared to 1 year earlier. MBS data also revealed a narrowing in the year-on-year decline in volume of new home sales during the January to April period compared to the first quarter of the year. But overall, I think China is not all too eager to boost up the real estate into a speculative mode, but they are looking at ways to help the real estate to grow out of its current downtrend. But I think China would not return to the speculative period during the first 20 years between year 2000 to 2020, because the Chinese government already said, okay, homes are for living, not for speculating. But right now they are trying to manage the decline so that it actually helps to reverse the trend to slightly more positive instead of negative. But I doubt the government will encourage the kind of wild speculation like in previous year. They just want the real estate to recover so that it will help other industries as well, especially those in the building materials, in the cement and steel, as well as in home decor. So electricity consumption, China's electricity consumption saw steady expansion in April. Power use rose 4.7% year-on-year in April to 772.1 billion kilowatt hour. Power consumed by primary and secondary industry gained 13.8% and 3% year-on-year, respectively, while tertiary sector rose 9%. Electricity consumption for urban and rural residents reached 93.6 billion kilowatt hour, marking a year-on-year increase of 7%. From January to April, total power use climbed 3.1% to 3.16 trillion kilowatt hour. So here's what China is doing to boost the real estate market. So they have rolled out a new policy to revive the real estate market. Now here is revive, not to allow it to grow into speculative market. Primary focus on quality development. Among the most notable provisions are minimum ceiling height of 3 meters for new residential buildings, mandatory elevators in structures with 4 or more floors, and enhanced sound insulation for walls and floors. Trends towards downsizing and upgrading on the land supply side, which signals a significant increase in the availability of high-quality homes in the near future. Many cities have proactively adjusted their land supply structures to reduce overall volume and focus on premium plots. So they are going for quality rather than just build up the entire area and hope for people to buy. So right now they are scaling down, okay, providing quality homes so that it helps to improve the overall concept of the living space. And that is the direction which they see will actually encourage people to buy. These plots typically feature complete surrounding infrastructure and moderate floor area ratios, making them well suited for building quality housing. And Chinese major banks have also reduced the LPR, which is the loan prime rate. So what could happen in June? China retail sales could see a comeback in May and June due to overlapping effect of the 618 shopping gala. In fact, the promotion for 618 already started in the second week of May. China's industrial production looks set to rebound strongly in May and June due to a surge in orders from the US after Trump reduced the tariff. So that would give until June to the by July, unless they extend it further or they have come up with a new deal, then July could be something that will change. So they have until May and June to stock up. So overall economic indicators will stay buoyant. China's international trade in goods and services will see higher surpluses due to the surge in demand from the US. Real estate market continues to face challenges. And recent LPR could feel some buying. But I say that it will still be in a state of slight decline because of the tariffs, the Chinese will be even more, the population will be even more discerning when they want to invest in something that is a huge commitment. So moving forward, I believe US-China trade deal discussion will see more frictions than compromise. The US threatened legal action against any country buying Huawei chips before scaling back the threat amid China's protests. A trade deal that is accepted by both parties is a long shot given the US intention to kneecap China's technology development. So that is where there will always be friction because the US is not working towards a win-win solution. It is working to how to contain China. And because of that, there will be huge disagreements. Now, I want to touch on uranium because Trump recently signed an executive order to boost the development of US nuclear power. Now, this caused uranium stocks and related ETFs to rally strongly. The world does not have enough uranium to go around for the additional nuclear plants coming online in the next 5 years as it takes 7 to 10 years to develop a mine. Now, to put it into context, about 65 reactors are under construction across the world. All will be online by 2030. Another 100 further reactors are being planned. New plants coming online in recent years have largely been balanced by old plants being retired. Over the past 20 years, 106 reactors were retired and 102 started operation. So this is going to change if, let's say, Trump executive order is going to boost the development of nuclear plants that is on top of the 65 being developed right now. So if let's say another 20 comes being constructed and will come online somewhere around 2030, then we will actually see that there will not be enough uranium to supply to the overall market. And that is the reason why uranium stocks rallied. So in terms of geopolitics, India and Pakistan tension will remain, even though both have not entered into a full-scale war. There are intermittent clashes and intermittent missiles being fired. Nevertheless, there is a simmering tension between India and Bangladesh now. The US Navy has pulled out of the Red Sea, but the humanity crisis in Gaza remains. Yemen will continue to target ships going to Israel. Russia has upped the tempo of strikes against Ukraine, especially after the latter's attempt to assassinate Putin while he was on his way to Kursk in a helicopter. Now, Evelyn talked about things happening in secret. Well, this is something that I see transformative coming from the BRICS, because BRICS member countries could be making a move to establish a new financial system. The Shanghai Gold Exchange International is planning to open international vaults in several countries to back the renminbi-denominated trade. So this could have wide impact on how trade is to be conducted in the coming years as China ramp up the internationalization of the renminbi. So Evelyn, back to you.
Yeah, okay, thank you. I'm busy. Let me reshare my screen. Okay, So before we go to the summary, let us update on our courses that we will have this year. Okay. Okay, so PC and I actually has written a book on Unlock Your Wealth Potential. And from the book, we have also put in the cost to sort of every year we will update, there's always new updates. So we will also update the cost. So the cost is more comprehensive than the book itself. And we also talk about, how to accelerate your wealth growth in period 9. In fact, it's not future wealth. Now it's already period 9. So it's your wealth growth in period 9, where you will gain insights on the future, on the economy trends of period 9 and opportunities, harness on the Chinese astrology and also global trends results for you to make more informed decision on your investment. If you have better insights into the futures, do you think that you have better, decisions that you can make on your investment? Do you agree, everyone? Can you put in the chat if you agree? Can you put a 2 in the chat if you agree to this? Yeah. Okay. So thank you, Audrey. Okay, how about the rest? Yeah. Only Audrey agree. The rest all not agree. Okay, thank you, Mitra. Okay, so yeah, thanks. So definitely we will have a course over the 2 weekends. 7th of June is session 1, day 1 by me on the astrology part, and 14th of June is by PC. PC will explain more on this session. So recording is available, okay, for a limited time after the course. For members, if you cannot attend, then it's okay. You can always catch up on recording. So the key learning is that you will understand Chinese astrology, how it impacts economic and trends, gain insight into the performance of 5 elements, and also unlock your personal wealth code, wealth potential, and make informed decision on your investment. Okay, so the day 1 is that I will introduce on Chinese astrology together with period 9, okay, and explore the significance of period 9 and the potential impact. In fact, the impact we are starting to see, and we compare some of the period 9 upcoming one with the past. How is it different? Because there's also an energy shift in terms of geographical regions. Okay, so and module 3 we will talk about how period 9 is going to impact the 5 elements economic activities related to those 5 elements of wood, because most of the industries, they can be categorized into wood, fire, earth, metal, and water. And I add in a new module this year on case study for prosperity, that sharing the country, the leaders, astrology chart, and some of the selected stocks astrology chart just for study. Okay, so from there you can learn a bit about how to read astrology chart of a country, of a leader. Okay, and also the stock astrology is like case study. And module 5 is actually on activating a wealth code in period 9, which is a key module itself. So we will look at how your 4 pillars, your birth chart, align to period 9. Okay, there are certain ways to look at it. And then how to empower your environment, which is feng shui for period 9. And also the skill sets to invest and action plans for men itself, because we have also to take action, the Trinity. And also universe, the detail, commanding framework for us to work with the universe in order to command and attract what we want, which is very important in period 9. If you have all this, I think you will be way above than most people. Okay, so in the day 2, let's talk about day 2 BC that you will do. You will break down the economic performances of each element, right? BC.
Okay. Now this will be, some of these topics we have already discussed in generally according to industries
Sorry.
last year. So we are not going to repeat it against this year. So what we'll be looking at specific industries, instead of just talking about the industries as a general, like what we did last year, we will, what I'll do is I will pick certain industries and the company that thrive in that industry, so that this time we are focused on companies, especially since period 9, there's a lot of the development of technology will change the scale of how industries perform. This one will be very much focused on a lot of tech companies that are in the front row of technologies and how they are revolutionizing some of the industries. So this is what I'll be talking mostly about. Okay, previously generally about industry. This time we focus on certain companies that can harness the technology to thrive in those industries.
Yes, that's right. Okay, thanks, PC. So we have added in more content. And actually, you can also, you want to know about 2025 and the development, you can also look at, you can also check out our 2025 Astrology and Global Trend Forecast book. Okay, you can download a chapter. Actually, we have already put in the link sometime in the registration, I think in the mailing also. Or you can actually get this book for free by joining us as a member. Okay, so we are still open for membership. The membership will be now till December 2025. So the comprehensive is 188, and the premium is 299, and we still have welcoming gifts for all the members. Okay, including premium and also comprehensive. We have a list of high dividend yield share that we posted to our members. I hope some of them they bought. Some of the dividends are quite good. We have spotted some that goes up to double digit. This is PC's list, not my list. Also, he's the one that compiled this list. He's the one that make in-depth study on this. Okay, so consider join us as a member. If you join us and a member, actually we have a lot of track records. Okay, some of the stocks that we have, we spotted. Even Bitcoins, we also talk about it, and then those in the weekly report, we even put in more perspective, even from the Chinese astrology part on Chimen Tree, Victory Palace, deity, and all these things. And yeah, and also actually, we hope that you can join us, because for the course itself, we will, where is the course? Actually, if you if you want to get the membership free also you can join our period 9 course for the public, and then you can get this membership free at the end of the year. Okay, so the registration link is, we already put in the registration link for those that non-members. You can become members as well as, join this course as well. We package everything in. Okay, so check where is this one. We already packaged the whole thing inside this course. So let me check. Oh, okay. Unfortunately, I don't have the slide. I can send to the attendees here if you are interested. So you can check out in the form itself. Actually, the form also has this information. Let me just go to this link here. Okay, let me share this screen. Okay, share the screen. Okay. So yeah. So if you look at it, can you see my screen? Okay, if you look at it, yeah, you can have the member, okay, or you can, we will give you one comprehensive member, okay, and the replay itself, and also the free cost. Actually, we have adjusted the cost of the member to 147,247, and for comprehensive and for premium, and then comprehensive is 147. And actually all the free gift is worth 635, and you will have, you know, the replay of the last year's astrology and personal finance, and also the free course on how to pick the growth stock that is worth 299 by BC. So we package everything in, which is 747 for this course. You can either join us as comprehensive premium member, or or you pick the course, you will have the comprehensive member. Okay.
Now, actually, if you for this cost, because we are giving we also included last year, because last year was strictly based on industries according to the element, and we have a lot of examples of companies there. So I will not repeat the same thing, because alongside that, there's also how a technique that I use in measuring how companies perform according to certain KPIs. So I'm not going to repeat all this again. So that with that free replay, you can actually see how I derive, some companies that meet certain KPIs guidelines which I have set. It's just a method of measurement. It's not a financial advice, but this will allow you to have a basic, and then you can do further due diligence based on this, and also use this as a basis to weigh what other analysts are saying about particular companies. Now, most of the companies that this time I'll be sharing in this period 9 course will be those that have some analyst ratings, so that you will know why the analysts whether my analysis and the other analysts would actually come to a conclusion that is alike, okay, for you to make a more sound decision.
Yes, that's right. So that means we will include the recording of last year's period 9 course as well. Okay, so this is I think one more thing that we can include in for you all as a reference. Okay, so these are one of the things that you can look at. And also, let's go through the summary that we have. Let me go back to the page itself, and we can do a quick summary, and then we can do a Q&A. So overall, in June, we expected to see extreme heat, fire risk, volatile winds, and respiratory health alerts due to poor air quality. And actually, respiratory is also metal, and then we have a lot of fire, so it will counter metal. And I really hope that this will not come true. Okay, so I'm sometimes I'm glad that some of my prediction does not come true. Okay, then subtle increase in governmental control, especially post summer solstice. Okay, then we have heightened wind related incidents. Oh, this one is already done. And then commodity inflation, manufacturing disruption due to supply chain disruption, and also some of the rising of the energy price. Yeah, BC, over to you.
Yeah, as I mentioned, the stress in global bonds could cause a flight to safety in commodities and potentially push the stock market lower. And watch out for a black swan out of no.
Oh, cannot see my screen?
No. The black swan just changed the spelling. SWAN.
Oh, okay.
Yeah. So out of Japan, as JGB's yields continue to spike, behind the scenes, the US and central banks could be plotting a monetary reset. BRICS member countries could be making a move on a new financial system. So what I'm trying to say here is that both the Western and BRICS could be a dichotomy of system. So because each group or each bloc is looking after their own self-interest, so global tensions will continue to simmer.
Yeah, that's right. This is so period now. This is one of the characters. Everyone will, will be quite individual now. Yeah. Okay. So I think that's it from us.